Shah is with us, founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Good morning. Thanks very much for your time. The market structure seems to have weakened and we are down now. Although we off about 300 points in the Nifty from the lows day before yesterday. What's the broad sort of price action and technical view from here, near to medium term, Gautam?
Good morning, Prashant. Well, I think the key question that a lot of people are trying to answer is whether this is a correction within the larger bull market or a full-blown downtrend or a bear market that's going to continue for many quarters to come. I think the biggest disconnect for most market participants in India is for the first time, India has gone completely off track as a market. And you have the world staying very, very strong and in a bull market, whether you look at the US markets or the European markets or the Asian markets. I believe that this is still a correction within the larger bull market because I think we saw a massive run-up for about 18 months. And in that context, I think this fall is still quite normal, even though a lot of people might not want to believe the same. The real damage has really been in the broader markets because the average decline, the whole of NSE is about 28%, whereas if you look at the Nifty itself, it's fallen about 12%. I do believe we've come to a point where sentimentally we are oversold, technically we are oversold, and based on bread data, we are very, very oversold. So a deeper cut from current levels looks unlikely. It seems as if the market is stabilizing. 22,800 was and remains a very important support. We've seen some stability from that number in the last 2 days. And if the Nifty can build up from here and possibly get past 23,350, 23,500, I think all can be well very soon. And because all of our problems have been homegrown, I think what happens on the 1st of February, I think will be very critical to the overall trend of the market. So I would be optimistic. I think from a risk reward perspective, the downside from here is very limited. But as an investor, I think the upside potential is quite large. So I would be constructive from here. I think the downside is limited.
That's good to hear, Gautam. That's really good to hear. And you actually partially answered the next question that I was going to ask you. So if you could just elaborate on that, because you're saying the upside potential is large. And that's what I wanted to understand. That while the downside is protected, can we really expect a sharp reversal? I mean, the Nifty is down about 13%. So are you expecting, in the market last couple of years, it's always been a V-shaped recovery. This time we were wondering whether now you get into a longer time correction, maybe not price. But you seem to be suggesting that no, it's going to be better than that.
See, I think for the last 4 years, since the time we started rallying from the COVID lows, every time there has been a correction, we've seen a V-shaped recovery. I wouldn't be surprised if something similar happens. It's not that we've not seen corrections in the past. I remember late 2022, we had an 18% fall on the Nifty. Everybody questioned the bull market, questioned the fact that India is going to underperform, and then we came back very strongly. I think something similar can happen because I think India will have to be aligned with the rest of the world. So I think the upside potential is very large. Again, if I look at the markets from an 18-month perspective, I think there is potential 20% upside from where we are right now. And the reason I say this is because the weekly, monthly charts are all in great shape. We needed a cool off. We saw a bit of a madness, the SME space, the small cap space last August, September. All of that has cooled off. You can buy stocks at your prices, which you never got in the last 18 months. So I think from a charts perspective, your maximum downside is about 2 to 4% from here and upside is about 20%. So as an investor, I want to plan for the same.
20% upside over the next 18 months. This is on the Nifty, you're saying, right?
Yeah, that's correct. I think over the Nifty, I do see a possible 20% upside from here. And with global markets continuing to be very strong and with the US Dow at lifetime highs, I think the going is going to get better there as well.
Okay, we've got a headline there, 20% upside on the Nifty over the next 18 months. Nigel?
Okay, all right. Hi, Gautam. And good to hear you're sounding far more optimistic. So that's good news. I like the way you put it. Downside could be limited from here. There could be some downside, but you're potentially playing for the upside. So you'd like to be part of the uptrend. What are the stocks that will take the Nifty higher from here on?
See, I think a lot of people have been questioning the valuations. Honestly, we've come to a point where valuations are very comfortable. I mean, I'm not a fundamental analyst, but what I hear and what I read and what my team tells me, I think at current levels, we are pretty much at average valuations. And therefore, if there is one pocket that can really surprise on the upside, it's the financial services. I think there is a financial services index, which has banks, NBFCs, and insurance companies. I think we like that entire pocket. Bajaj Finance, as you all know, has been a favorite for a while now. And happy to see what it's doing today, and I think it's going to get better from here. And some of the top banks like SBI, SDFC Bank, ICICI remain at long-term support. So I don't see much damage coming in there. And if these three big boys were to start doing well from here, I think the Bank Nifty and the Nifty will do well. So the broader financial services basket is something that we are betting on if the market has to recover from here. I just want the Nifty to take out 23,350. I mean, that's my only marker number on the upside. Once that is cleared, I think the bulls take some control. On the other hand, auto is another space that we like. Real estate, I think, has a very good risk reward. And I think metals is something that we've liked for long. And I think the downside from here is limited as well.
Okay. On that point about the budget, I know it's not a technical price action question, Gautam, but isn't the mood sufficiently bad that even if the budget were to disappoint, that should not act as a fresh trigger for a sell-off?
Markets are all about expectations and discounting. And because the expectations are so low, given all that has happened in the last couple of years and the double whammy that we got last year, that I think that 1st February can only get better. And with the markets open, it better be better. So I do believe that, since our issues, the slowdown and earnings, the downgrades and all of that has been homegrown, I think the government has a task. And I hope over the next couple of weeks with the budget and the RBI policy, any positive surprise and the market will lap it up. And I think you will see the change of screen instantly.
It's that season where everyone's trying to predict the mind of the finance minister. I was speaking to someone, from the tax world this morning, and they were saying, no, it's going to happen. The middle class has not gotten anything so far. It's been either the upper class, because the surcharge rate was lowered, or the people at the bottom of the pyramid. Middle has got nothing. They're saying it's going to happen this year, Nigel.
The chatter on social media was quite interesting. I put out some F&O data and all. People are replying to me, Nigel, are we going to see the Nirmala ma'am candle? They're calling it the candle. In case she doesn't disappoint, then they're talking about, this is a new one.
Nirmala ma'am candle.
Candle, yeah, the upward candle. You talk about that one.
It has to be a bullish candle, though.
And a lot of people, and some of them are not replying on Twitter, they're replying personally as well. So I was like, this is a new one. And these are 2 sessions ago. So for them, actually, that candle is taking place. Thoda upar.
Gautam, my question was actually the opposite. Not whether it will surprise on the. My question is if there's nothing in the budget,
then will we fall more?
Can it act as a trigger for a fresh fall? Because the mood is bad. That was my question.
It looks unlikely, Prashant, because I think most of the negatives are now in the price. I think the kind of decline that we've seen in the broader markets, there has clearly been panic on the screen. The bread data is terrible. Percentage of stocks trading off the 50-day moving average, 200-day moving average. Yeah. And, we handled capital gains and STT so beautifully last year. If we can handle the worst possible news flow, that's probably the reason I'm saying that it can only get better. It can't get worse.
Okay, I love the optimism this morning, Gautam. So I think all the bulls are going to be with you, and they will wish and pray that what you're saying really comes through on the budget as well. But getting back to that thesis, because your thesis is 20% up on the Nifty next 18 months. So it's a great time to start building portfolios. Tell us what would be your top longs then in that case?
Well, as I just said, that financial services is something that we like. I think, if I'm not wrong, the Bank Nifty now trades at a PE of about 13, 14. Many of these stocks have been hammered without no logic, and they're all trading at beautiful long-term support levels. So I think financial services will make a top comeback, followed by the IT sector, which I think has seen a lovely breakout on the ratio charts. And I think they've been quite resilient. I'm referring to the top IT names. And I think auto as a sector, auto and FMCG, and even PSU, these 3 baskets, which have seen a very large fall over the last 6 to 8 months, can also come back. And mind you, if you look at the mid caps and small caps, they have been in a consolidation or a time correction for almost 8.5 months. They've come to a point where the risk reward for top quality mid caps and small caps is once again lucrative. Again, please look at the context of the rise in mid caps and small caps in the last 2 years. Many of these stocks were 3x, 5x, 7x. If after that they lose 30% from the highs, as a technician, I would still consider it normal. So anybody who got into the market in 2024 must be complaining. But if you have been invested over the years, I still feel that this correction is digestible.
Okay, all right. That's a good optimistic note to have just, days ahead of the budget. Gautam, appreciate it. Thank you very much. And we look forward to connecting again. Let's see what happens on Feb 1, and then we'll pick it up from there. Thanks very much for the advice this morning.